All right, welcome back to Community Real Estate Talk Show. Our next guest, Bud Perry. He's the branch manager at Alaska USA Mortgage. He's been originating mortgages since 2003. Over the last 10 plus years, he's helped hundreds of clients find their first home, dream home, second home, and rental home. From the simplest of transactions to the most complex self-employed borrowers. Bud, how are you doing, man? It's good to see you.
I'm good. Thanks for having me.
Hey, how are things going? What have you been up to, man?
It's as you know, you're in the business, so we're both kind of experiencing, a shift in the market right now. Things are getting busier. My business is going through a bunch of legislation, so we're trying to navigate the waters, I guess, as best we can, and power through it and keep doing our job.
So how have things changed once you first got into the business? How are things different?
When I got into the business back in 2003, it was completely different to what it is now. It was, everything from the point of sale systems that we used to the way mortgages were done to the way mortgages were priced, or I should say specifically the way consumers got interest rates. Everything is different now, and for the most part, it's for the better, I think.
And Bud, you've been really successful as a loan officer, and you've had some good partnerships with some new construction. What has been the key to being in this business for so long? It's been so up and down.
That's a good question. For me, it's been wake up early, go home late, and work hard every day, and try and keep everybody happy and do the best job you can. And you don't get down about the little stuff, because that stuff happens all day every day, and it's just something we have to deal with. And just keep positive and work hard has been the biggest thing for me. I don't have a silver bullet. I haven't heard one, or heard of one that would work for me. And the same thing I tell my guys is just work hard. You can manage a lot just by getting into the office before 8 o'clock. So I guess the best way for me to answer that is just it's been hard work, and I guess above all else, if I say I'm going to do something, I do it.
Excellent. How are the interest rates calculated? I have so many people thinking that it's just how the economy's doing, treasury bonds, all that stuff. I mean, what's the correct answer, Bud?
A lot of people follow the 10-year treasury, and if you ask 20 people, you might get 20 different answers, and one of them isn't the 10-year treasury, and a lot of people think it is. It's mortgage-backed securities, it's mortgage bonds. That's what interest rates are priced off of, and they move up, move down all day long. We happen to be live pricing, so I encourage people. I mean, that brings up a good point when people are out shopping, is to, in order to get as close to apples as they can. When they're out shopping mortgage, people do it on the same day, at the same time, under the same circumstances. That'll give them the best idea of where things are at, where they're going to lie as far as rate goes. Because if you do them on separate days, I mean, it's just like the market. If Apple closes at 400 today, it may open up at 415 tomorrow, or wherever that is. I don't have any Apple stock, so I'm not sure if that's right. But and all day long, the stock will change. It's the same with interest rates.
So when you're doing these new construction loans and homes are 4 to 6 or 9 month build, what are you telling the buyers if you're seeing a little bit of an uptick in rates? You just hold off, or what is the advice there?
That's a tough question. It can be it's a tough question to answer. It can be bittersweet for the consumer, because there's not a lot they can do. Interest rates go up and down, or I should say, based on the amount of time that an interest rate's locked, determines how expensive or inexpensive it is, I guess is the best way to put it. So if an interest rate, these are just round numbers, if an interest rate's 10% for a 30-day lock, for a 45-day lock it may be just a touch more, because what happens is the bank takes a little bit more risk, because they lock it for a longer period of time for the consumer. So when you have new construction deals, it comes down to, you're at the market's mercy, is what I like to say. Yeah, you can definitely lock for a longer period of time, 2 months, 3 months, 4 months, and take a little higher interest rate and take out any of the market risk But if the market comes down a little bit, you can't take advantage of the market unless there's a float down option, which gets into a whole nother realm that could take another hour of conversation. But it's a tough question and a tough answer, and something that takes the consumer just sitting down with the loan officer and going over it with them so they understand how it works.
It's important to have someone that does that all the time, though, when you're in those situations, because you want to know the options, right?
Right. There's a million and one options and a million and one ways to go about a transaction, and there's different mortgage products out there. There's different lengths of time to lock interest rates, and just it's kind of it's moving pieces that you're trying to get put into place. So yeah, definitely sitting down with somebody and just getting the whole picture on how it works and what the best play is to me is the best way to go about it.
So many times I'll talk to buyers or even sellers. I had a listing appointment last night, and they didn't realize, some people just think you have to have 20% down to purchase. Are a majority of your loans you're doing, are they 20% down? Or, I'm selling houses and it's a lot of 3.5% down stuff.
Yeah, true. That's funny, because I'll read in the paper sometimes that maybe in the editorial section or something, and people talk about that, or I'll hear it on the radio, and it's so far from the truth that it's, I sit there and wonder, where is this information coming from?
Yeah.
Who's saying that? No, you don't have to have 20%. You don't have to have a 750 credit score. FHA's got a good program out there. Conventional has a good program out there. There's programs out there that are zero down. There's all types of programs that aren't 20% down. You don't have to be a millionaire to do them. We're doing mortgages for each and everybody out there.
So we're going to start seeing a wave. We've started seeing a little bit of buyers that had credit problems in the past, people that had to short sale 3, 4, 5 years ago, foreclosures, and they're coming up to their time frame when they're able to buy again. Do you guys have advice or services to help them, get their credit back up if they're in those situations?
Yeah, I use somebody specifically for credit advice and things of that nature, and I would tell anybody, that brings up a very good question about time frames and when somebody can buy after they've foreclosed or maybe had a short sale or something like that. A lot of people say, well, I pulled my credit report and I know where my credit score's at, and in reality, the credit report they pulled isn't the credit report that we pull. We pull a what's called a tri-merge credit report, and it's from all three bureaus, and some of the information on there could be different than what they're seeing. So I encourage people to at minimum, go talk to somebody, get your credit report pulled, and have them review it with you. And if nothing more, you can at least get somebody to look at it for you and tell you, hey, maybe some of these things you need to work on, or point you in the right direction at least.
How's the interest from buyers coming in and getting pre-approved? Has that picked up a little bit at the start of the year?
We've got people that kind of do it all different ways. It's funny. It's you'll find people that get pre-approved before they've ever talked to real estate agents, and then you'll find people that talk to real estate agents and are getting the whole pre-approval thing done last. Obviously in your world and my world, we'd like them to come talk to people like me first and get all of that done and settled and out of the way before they go out and look at a bunch of houses. But it happens everywhere for us.
Yeah, it's kind of interesting. You can understand the excitement that's going to make you want to make that move and go look at some stuff, but I always tell buyers, hey, you don't go shopping unless you know you've got some money in your wallet, right?
Yeah.
So they need to take a look at that.
Yep, very true. You don't know how much you can spend, right? If you got some money in your wallet, you don't know how much of it you can spend. So, it's a good analogy. I totally think that if somebody was out looking, it's definitely the first thing they want to do is just talk to somebody, see where their credit lies, see how much they can borrow, see just get all of that stuff out of the way.
So you've got a lot of referrals coming from families and friends and everything, and probably a big part of that is your sit-down first meetings and going over expectations. What kind of stuff do you cover in that?
I try to be, maybe sometimes to the detriment, I try to be pretty straightforward, and I don't think it's bad. I've been doing it long enough now to where it just becomes, it's normal, and I think it's good for them to hear, okay, this is how this is going to work, this is how this is going to work, here's what you're going to need, here's what the mortgage market is like now. I'll sometimes tell people or ask people, that sit in front of me, say, have you purchased or refinanced in the last year? And they'll say, yeah, or they'll say no, we haven't done anything since 2008 or something, and we bought 7 houses. So even though we haven't bought since then, we know how the process works. And I'll stop them right there and just say, it doesn't matter. You're new to the mortgage market, so throw everything out that all the processes, how it worked. Try and put it in the trash and understand that the process now is going to be new and different, and there's going to be a lot of things that are asked of you, and just to kind of roll with the punches and be prompt about getting stuff to me, and we'll do our job on our end, for sure.
Economists on last show that we had last Saturday, and he talked about, it's just a crazy stat, I think it's 22 to 34-year-olds, it's an all-time high living at home with their folks. So what do we tell to them? I mean, not everybody wants to live at home, right? They're probably living rent-free and possibly working with gathering their down payment, but what advice it goes back to...
I think I've heard that stat too, and I think that it may be just preconceived notions that they have in their head about, home ownership, really. I mean, in the end, that's probably part of it, if not a majority of it, is they don't know where to begin. They're pretty comfortable where they're at. Personally, I don't knock them for staying at home, or that's to each his own on that piece. But if they've ever thought about home ownership, I would say, like I said before, it costs nothing. If you can sit down with a good loan officer that knows what's going on, there's a wealth of information. Even if they don't buy a house, there's a lot of stuff to learn.
Ladies and gentlemen, we got Bud here. Just a couple more questions for you. So we talked a little bit about getting into the mortgage business and how you've had success with it. What do you see happening at the end of the year?
That's a tough one. It's kind of like the question about where interest rate's going to be in 30 days. And I've always said any originator out there that answers that question and says they know is lying.
Yeah.
So it's tough. It's I have a not apprehension isn't a good word, I guess, but I'm really excited to see what happens. Because any of the CFPB stuff that comes down and all the changes that we deal with, we have to deal with them, and that's just the way it goes. There is no other way around it. So, I'd like to say that we have a great year, and we're I think you would agree, we're off to a great year. I think as the market turns, we'll see more people able to buy because they've got more equity in their house, and so they now can become a seller of their house because they've got enough equity in it, and they can go and move up and buy that house that they wanted, whereas maybe they didn't have the equity before. So as the economy improves, I think that's going to play a large part of it. My goals are always to better myself for the year, so that was part of my 2014 goals, was to have a better 2014 than I had in 2013. So I hope, and I really do think that barring any huge problems with the economy, I think we're set, and we're on a path to prosperity as far as the market goes. We're not going to see double-digit price jumps and or I should say value jumps, but we're going to see modest improvement, and that's the way I want it because that's a healthy market.
Excellent. And everybody loves a healthy market.
Yeah.
Ladies and gentlemen, I got Bud Perry here with me. Thank you so much for coming on the show. I really appreciate it. Always great hearing what's happening.
No problem. I appreciate you having me, man. This is good.
All right, Bud. We'll take it back to the producer. I'll talk to you soon.